Hey everyone, Rob B here with Rob D, and you are listening to the Property Podcast. Who loves insider insights? We all do. So this week, Rob and I are getting deep into topics that we would normally keep off mic, but today we're sharing it with all of you.
Yes, thank you for joining us for the Property Podcast. As Rob said, this is what we do. We spend all day doing this stuff, talking to lots of different people, and my favourite episodes are the ones where we take some of those insights and share them with you for free, of course. So if you just stumbled across this episode or a friend's recommended it, do make sure you subscribe on your favourite podcasting app, on Apple Podcasts or Spotify. Just hit the little plus button or follow or whatever it says. You can figure it out and make sure you get every episode sent straight to your device. And stick around to the end of this episode because we're going to be sharing a tool that can make you insanely more productive, especially if you don't like writing. HS2 is back in the news this week, so we go over to our rail correspondent, Rob Bence. Rob, what's going on?
I am geeky enough to be passionate about this. I think a lot of people are actually passionate about HS2, certainly politicians are. And it seems from the latest headlines, which is across most media outlets, is that the government is starting to go cold on the second phase of HS2. So HS2, for those who aren't aware, is the superfast train from London to Birmingham, and then it was going from Birmingham to Leeds and Manchester. Last year they reduced the scale of that, so it no longer goes to Leeds but stops in the Midlands. And now they are making noises, they being a Conservative Party, that they may also reel back on Manchester as well, which, if so, would mean that we'd have a fast train from London to Birmingham, and the trains from London to Birmingham aren't that slow already, so I don't know why we would have spent multiple billions on that. Really, the point of this whole project, at least for me, is to level up the north and bring all the economic benefits to the north by building this line all the way out. They haven't canned it yet, but normally the government warms people up to the idea by saying they're looking at it, and then they follow up with an announcement. Now, the Labour Party are also politicians and been very clever, and they've been non-committed to this as well. So previously they've said they are committed, but knowing that this is a hot potato, they've said, well, we'll wait to see the numbers before deciding if we actually are committed. So we've got two non-committed parties to HS2. We've spent billions on getting it to Birmingham. We've already spent a few billion preparing the tracks to Manchester, but they're prepared, it seems, to throw that away and just cut their losses with a fast train to London to Birmingham, which, as I said, Rob, I'm sure if that was the original project, it probably wouldn't have gone ahead, because spending billions on a line that isn't that bad in the first place doesn't seem to make a lot of sense, at least to myself.
I've got nothing to add to this, really, because it just makes me a bit upset. So I think I'll move on and say that if you're getting your fix of news, hopefully some better news, in the Sunday Times this week, you will find us, as you do every week, in the home section, where we're helping readers out, as always, including this time a landlord who's in the position of making a loss on their property, quite a chunky one, and wants to know what to do about it. So check out the Sunday Times for that, and if you're a subscriber, you can find all our previous advice on the website there.
An extra bonus point if you take a picture of you reading our article in the Sunday Times. If you do, make sure you tag me and Rob in to our Instagram profiles. Rob is the Rob Dix and mine is Rob_Bence. Make sure you tag us in. Extra bonus points for those with photos of the Times article.
So Rob and I, of course, have lots of the chats throughout the week. We're often sharing things with each other. Rob will often have a meeting with someone, often someone pretty influential, and then call me afterwards to share something that he's learned from that conversation. But today you get to listen in. So this is going to be more of a conversation than a structured kind of episode. We've literally got a few bullet points of what we want to talk about, and we'd love to know at the end what you think about it. But Rob, to start us off, I know you had a super interesting conversation recently with someone in the lettings industry.
Let's do this. So Rob, I've had a really interesting conversation recently with the owner and CEO of a major lettings business. And this lettings business is national, and it's in the top 5 biggest in the UK. So that gives you an idea of the scale. You know who it is. But for the sake of their privacy, I won't say their name because I've not asked for their permission. But what I can do is talk about some of the insights that I took for that conversation, because it was really interesting. And as you'd expect, we talked about the market, but we got on to stuff beyond that. And the market, for what it's worth, in his words, has proven to be very resilient. So there's been talk of landlords exiting the market. And there's been talk of rents being so high that people are going to start defaulting. And while there is some statistical evidence to suggest that both of those things are happening, but not in a meaningful way, just more than they have done in the past, he said that across the nation, not just regionally, but across the nation, that their portfolio has been really resilient. And although they have had some landlords wanting to leave the market, and although some tenants are defaulting, it's not nowhere near in the scale that people seem to be talking about or commenting on. And I think, actually, if you think about it, you can see why, because to leave the property market, it's not like flicking a switch. You can't go, I'm out, and then suddenly you're out. That process can take months, and we're in a very quiet market. You know, there's not a lot of transactions happening at the moment, and most people, if they're selling, it's because they really, really have to or really, really want to, but most people are sitting by. And it's no surprise to me, Rob, that landlords are going, well, it's a bit of a faff and a hassle to have to sell a property, so I might not like it, but I'll put up with it.
Yeah, I think that's right. And the problem is, like you've said, it's not a great market to sell into. And because of the psychology of how these things work, everything else can remain true. But if the property market is strong and it seems like prices are going up, you can kind of put up with everything. When that turns, it looks like, prices might fall a bit, there might not be any capital growth for a while, then suddenly you want to sell. But of course, that's the time that you can't sell. You should have sold a year ago when everything was flying, but people just don't do that. So people don't sell when the market's strong because they don't feel like it. They don't sell when the market's weak because, well, it's not a good market. Therefore, you end up holding on. It is a case that on a net basis, landlords are selling. And that's been the case every year since 2016. And I suspect, but I don't know, that that's a very specific segment of property owners. So if you've been in the game since the first buy-to-let mortgages came out in, 97, something like that, then you've had some great capital growth, you probably paid off your mortgage, everything's been progressively getting harder, the tax position's not as good, then yeah, it kind of makes sense to get out, doesn't it? And add to that, unless you started extremely young, you'll be getting older as well. There might be a time that you were thinking about selling even if this other stuff weren't true. And that is, of course, a large segment of the market. But then we know from people who listen to this podcast and are customers of our business and so on, the appetite for property in general from people in that stage of life and in that circumstance is as strong as it's ever been.
See, so here's the mad thing, right, Rob? We've been doing this for far too long that I'd like to admit. Well over a decade, let's just say that. And it still surprises me how you can be surprised by just things you learn. And this was the thing that staggered me from this conversation. Now, this may have been obvious to you, but it wasn't to me. Because of the world we're in, we are talking to people who want to be property investors. So they're making a deliberate decision. We're working with people who want to become property investors through our businesses like Property Hub Invest. So there's this deliberate action of, I like property, I see the benefits of it, I want to come into this market. And because that's been our world, that's what I thought made up the majority of the buy-to-let market. Well, you still could be wrong after doing it after all these years. Because in this portfolio of tens of thousands of landlords, he said the majority of them were accidental landlords.
Whoa.
Which really surprised me. And he said that he's focusing on his business on investors who are being more deliberate because it's those accidental landlords who are more likely to exit the market, in his opinion, which on a common sense level makes sense, right? You know, if you didn't go into this deliberately and then it starts to get a bit hard, you're more likely to come out. So he feels it's the accidental landlords who, at least on his books, which is quite a big book, make up the majority of landlords. So subsequently, he feels it's the accidental landlords are the ones moving on. And I'm sure there are deliberate investors who have decided they've had enough as well. But it's the accidental ones who are far more sensitive to what's happening in the market.
I'm very surprised by the fact it's a majority. If you'd asked me to put a percentage on what proportion were accidental, I wouldn't know, but I wouldn't have said the majority. No way. But I suppose that really speaks to the emotional component of property, which is so strong. Like we see it in terms of the questions that come into the Sunday Times. You get loads of questions about, I've just inherited a property from my mum and I've got to split it with my two brothers and none of us live anywhere near. We don't really want to do this. How do we do it? So we'll just sell it. Obviously, you should just sell it. This just doesn't seem to make any sense for you to run as an investment. But there's that emotional link that you wouldn't get if you just inherited a portfolio of shares, plus the difficulty of selling. Someone has to take responsibility for that and all the rest of it. And the same goes, of course, for a home that you used to live in but kept hold of for some reason. So I suppose when you think, well, situations like that are coming about every day and not that many people are making a deliberate decision to become a property investor, that's how you end up with a majority. But I'm still very surprised.
This is why deliberate investors are needed, and you could be argued build to rent as well. because there needs to be somebody in the market, otherwise rents will just go up even further. Like, rents have been rocketing already. But imagine if all the deliberate investors started exiting the market, then that changes things on a dramatic scale. The government needs professional investors, and you can be a professional investor with one property. It's just how you treat it. And if you listen to this, I would consider you a professional because you're clearly trying to level up what you do. But that's why the amount of rental stock on the market is where it was however many years ago, because you've got people exiting, but you've got more people in the country, and therefore rents are going up. And I can't see how this balance and this direction of travel is going to change. I think it will continue, and you will have professional investors come in, you will have build to rent, but if you've got your accidental landlords leaving the market, you're never getting enough new stock on to be able to satisfy demand, therefore rents push up further. The only way I can see this changing is if suddenly the government makes it really appealing to be a buy-to-let investor again, which the direction of travel over the last decade seems to suggest that's not going to happen. But you never know.
Well, this is the thing. Like, when you talk about landlords getting out, obviously the property continues to exist, so someone can still live in it. But if you've got fewer people wanting to come in as investors, then that can have a knock-on effect to the amount of properties actually being built in the first place. So just recently, there have been some figures out showing that new planning applications are at the lowest level since, whenever, like a really long time ago. So that's going to have a knock-on effect for supply in the future, because people aren't going to build if there's not much in the way of demand from homeowners because of the mortgage situation, or because of investors because they've been disincentivized. And as you know, the major house builders always slow their pace of construction to a speed where demand equals supply. So less is going to get built, and the problem is going to intensify. It just seems so unlikely that private investment in property is going to be encouraged even mildly anytime soon. But rental supply has got to come from somewhere. And that's why I think if I were the government, I would be bending over backwards to try to encourage build to rent, because that's a completely new source of stock. It's purely for the rental market. It's properties that aren't being taken away from owner occupiers. They wouldn't otherwise have existed. That's purely helping with the shortage of rental properties. And also, you would have thought social housing, because you've got millions of people in the private rented sector who the government is paying for to be housed there, who arguably shouldn't be there and wouldn't in the past have been there if you had any social housing. But there appears to be no interest from any party in making that happen. It never even gets spoken about. I don't really understand why. But the supply's got to come from somewhere. Yet it doesn't seem like there's any political interest in getting it from anywhere.
So it might sound a bit negative, that insight, but if you're a professional, I actually think it's great news, because you are in a market where there's less people, but you're in a market that's needed. Like, homes are kind of not optional. It's something that you will always need. A rental market needs to exist. So professional landlords, there is absolutely a place for it. I suppose it's a bit sad that it's not seen elsewhere, really, by the media or the government. Or if it is seen, it's just not the thing to do to big up private investors, because we are needed. And we do provide great homes, and it's an important service that we offer. And yes, I've not lost sight that you can also make money as well, but it's a business, and businesses are entitled to make money. It's kind of a thing. But before I get too political, Rob, let's move on a bit. But I'm going to stay on the theme of lets, but taking it in a very different direction now, is student lets. And I've been speaking, as I do, it's kind of my job, to other people in the industry, and also through my own observations. I've really started to see the purpose-built student let blocks struggle. I've seen quite a few of them come onto the market recently. And that could be because financing has got more difficult, or the financing has gone up, and therefore the returns aren't as attractive as they once were. But I'm not seeing anywhere near as many build-to-rent blocks on the market. It's very much student lets heavy. But it also seems that there's a trend, a movement of trend for students where, yes, they will live in purpose-built blocks, absolutely. They're not all sitting empty. But the reason why occupancy rates are down on where they once were is the trend of them moving into the private rental sector. And then this, Rob, links into rents again going up, because you've got a market that was quite happy to be in their own sector, but they're bleeding into the main property market, the main rental sector, which again pushes up that demand. And you see it in cities, that seasonal rental demand, to places like Manchester and Leeds. Leading up to the academic year, the rental markets go ballistic. And it's not student properties, it's residential properties, because it's students moving into the normal rental sector. And I find this fascinating, Rob. This could be a short-term trend. But if it's not, this could really damage that whole professional sector. And it'll be interesting to see what they do. I think more blocks will continue to come onto the market in the short term. But whether this stays as a short-term problem and then students decide they want to live in student blocks again or not, we'll see.
Well, you're getting me onto one of my favourite subjects here, because I've got a particular interest in this, because I live in a relatively fancy new development, and the majority of occupants here are overseas students. You've got virtually no families, and you've got a small number of professionals. And if that student market wasn't there, then it would have a dramatic downward effect on rents. So I'd kind of like that to happen, but it won't happen. So I see the effect of this. And international students in particular, of course, are very much sought after by universities because they pay a lot more. So universities encourage them. And they, to generalise, tend to be attractive tenants because they'll often say pay a year up front because it's easier for them to do that than to move money across from overseas every month. So I see this playing out, and I understand why it's playing out. Except what I don't get is why the move away from purpose-built student accommodation. Do you have any insight into why student preferences are shifting in this way?
I can guess. And the guess would be that when the purpose blocks were built, the facilities that were given to students were fantastic. There was pool tables, there was lounges, there was social areas. It was different. There was nothing else on the market. But Rob, as you've alluded to, you live in a nice fancy block, and that comes with amenities. And those amenities that once were pretty much exclusive to those purpose-built student blocks now exist in normal rental blocks. And that means you've got a choice, because if you want the gym and all the other stuff, you could live in the student accommodation, but now you have more options if amenity is important to you. And I think that is a big part of it. That's what made those properties different from the individual student landlords. So you'd have a house, and that house wouldn't have all those amenity features. So they'd be competing against those blocks. And that's why so many students were attracted to them. The good news here is for those who do operate in the student market, is that if I'm right, and obviously I can't prove if I am, but if I am right, then moving to similar types of properties, and students who want to live in the houses with their friends will continue to, because that's what appeals to them. And the amenity side didn't ever in the first place. But I think these blocks with all these amenities, I mean, Rob, they're incredible. I mean, we do a lot through Property Hub Invest. You obviously live in a nice place yourself with amenity. It's so different to even just 5 years ago. You don't even need to go back 10 years. 5 years ago, the rental market now, professional rental market in cities, is completely transformed. And it's not like it's levelling out. It seems that every scheme, every development's levelling up again and again, and it's difficult for the private student rental sector, the professional part at least, to compete.
Yeah, I've no idea if you're right, but it sounds absolutely plausible to me. I wonder what's going to happen to those blocks then that aren't in such demand anymore. I wonder if those blocks could somehow be repurposed into, again, rental properties for the standard market. I don't know how they're set up or configured internally, but if that's becoming a bit more mid-market, potentially someone could buy that and repurpose it for the general market. But presumably someone along the way will be taking a haircut because it's not going to command the premium it was when you were charging top-end rents.
Property Hub Select is brand new, but we are loving the feedback that we're getting already. Join us for in-person exclusive events, online masterclasses, and so much more. If you want to join Property Hub Select, then all you have to do is become a client of one of our services, and they are great services. So go to propertyhub.net/select to find out more.
Okay, let's broaden out a bit and talk about some more general investing kind of topics. Because again, these are the kind of conversations that we have that never normally get to air. And I've been thinking a lot about different asset classes. I'm in the process of writing my next book. Don't hold your breath for it. It's going to be quite a while. But in writing it, I've been reading a lot and sort of trying to take on a lot of different people's views about how to invest. And one of the core debates that you see is the property versus shares debate. And it seems like every month there's a new article comparing the two, going like, has property performed better, have shares performed better? And the reality is, depending on where you start and finish the comparison and exactly how you put your data set together, you can show that either of them has been better depending on your agenda. But something that I've come to realise, Rob, and I wonder if you agree, is that ultimately it doesn't have anything to do with performance, I don't think, in terms of people's preferences. It's just to do with some kind of general attitude or almost personality trait. So people who are pro shares will go, oh, well, property is a nightmare. You're going to get called at 3 a.m. It's a nightmare to buy and sell it. You don't get diversification, all that kind of thing. Whereas people who are into property kind of like don't trust the stock market on some deep level. I don't trust all these people. You've got all these people in the middle making money off it. I want something that I can control, I can see, I can touch. And no amount of figures about which has done best over the last 20 years is going to change anyone's view on that. And that's fine. And where I've got to, Rob, is that really, if you hold almost any sensible asset for 20 years, you're going to do pretty well. You might as well just pick one that makes you comfortable and that you enjoy on some level. And whether it's the best or not, who knows? And no podcast or financial advisor or anything should really have much in a say in that. I don't know if you agree, but it does seem to me to go to this very deep psychological level.
It is interesting how partisan people can be around this subject. I really don't care. I prefer property because I believe it to be the stronger asset class because of leverage. If I was buying cash and cash only, then it wouldn't be a lot in it. In fact, you could argue the other way that shares are probably the stronger performer over the long term. But certainly with leverage, property becomes really powerful. And we talked about that so many times. But while the majority of my wealth is tied up in property, my pension is all stocks and shares. And yes, there are some property-related shares in there, but that's just because it's a sector I'm comfortable with and it's a sector I know and understand. I do think that really you should just be investing and investing for the long term. And as long as it's a sensible asset, whether it be property or shares, you'll do well. I think the big one, Rob, for me, is the short-term view too many people have, whether it's in property or shares, trying to ride a Tesla stock to the moon or trying to become a property millionaire in 6 months. Although some people on YouTube preach that rubbish, we know it's not true. So for me, with this type of investing, I think people will always have their favourites, and I'm a co-host on a property podcast. So of course, it's clear which of the two my preference is, but I do have both, and I do invest both for the long term. And I was having a chat with some of our team recently, and we were talking about, shares, and somebody had said, the market was down X% that day. And you know what? I didn't care. And I actually can't remember the last time I looked at my stocks portfolio where I know other people look at it almost daily. I mean, that's not good for your health, your mental health. Like, why would you do that to yourself? Just buy it for good reasons. And you should always be buying any investment for good reasons because you have a belief. Buy in because of that belief, whether it's a property or stocks, and then just own it and just ride it out for the long term. And over the long term, in the majority of cases, you are rewarded, the vast majority of cases. Yes, you might buy yourself an Enron in stocks, and yes, you might buy in a place in the UK that's not performed as well as others. And yes, things do go wrong in property and with companies, but overall, most companies do well, most properties do well. And for me, the most important thing is the attitude of your time frame and how obsessed you are in the short term. And if you could somehow flick that switch off, which I don't know how I've done it, so I can't give you a method or teach you how to do it other than to say don't do it, but just switch off in your brain that wants to obsess with how your portfolio, whether it's property or stocks, is performing today. Review it once a year if you have to, but that should be enough, Rob. And I think more and more people need to think that way. And it seems the most successful people that I speak to, investor-wise, are the ones who do take that long-term view. And the ones who struggle and the ones who get most upset are the ones who take a short-term view.
Yeah, and I wish I knew how to flick that switch, because I think we've both done it, but I don't know how, so I can't take credit for it. But I wish I could tell other people how to do it, because it is the most useful thing you can possibly do. And then advanced mode, of course, is actually being happy if you notice things are down, because it means you can buy more of it cheaper. Because if you're still in accumulation mode, that should be what you want, right? What your property portfolio is worth today, what your portfolio of shares is worth today, has no relevance unless you're going to sell it today. So if you're still planning to buy and prices are down on where they were a year ago, well, then surely that's good news. But almost nobody sees it that way. I can't remember if I've done this particular moan on the podcast before. I don't think I have, but I got a message from someone saying, I've started listening to your show because I've lost faith in the stock market because my portfolio was down 20% last year. So now I want to invest in property instead. But that doesn't make any sense. It especially doesn't make sense because the general market was up 20% the year before that. So you can't be complaining when you get a move in one direction, but not the other. But psychology is weird, and ultimately just not looking at it and not even knowing if it's happened is the best way of protecting against that.
But if short-term wealth is the name of your game, then you might be interested in our little conversation we're about to have on Bitcoin and, well, crypto in general.
This is the sell warning now for the fact that you mentioned it, because I think we pretty much called the top of the market the last time we talked about Bitcoin. Our episode specifically about it was not long before the market completely fell off a cliff. So if you are invested in crypto, especially if we're about to say anything positive right now, you might want to take this as a trading signal.
I would like to add, though, if you don't go to the trouble of listening to that episode, we didn't recommend you to buy. So I just want to say that in our defence.
No.
But it is really interesting. And I had the pleasure of a conversation with Colin, long-time listener and investor. Hey, Colin. And he wouldn't like me saying this, but he is definitely an expert in this field. And I always like to get insights from him on what he feels is happening with this market. And what he said I found really interesting is that you have crypto winters, which is basically when everything's down in price. So you have the crazy periods where everything goes up, and then you have a period where it's down, and it's called a crypto winter. And this arguably is the third or fourth crypto winter if you look at all the peaks and troughs. But that in itself isn't that interesting. But what was interesting is what then he said to me, because this was something I wasn't really aware of, is it's during the winters when all the purists, all the people who truly believe in this, get their heads down and build on the technology and build things out further. So the last winter gave birth to NFTs. Now you could argue, what was the point of that? And you may be right, but NFTs came about after the last crypto winter because people were looking at technology and looking at what could be done. And there is a lot being done in this crypto winter, according to Colin, around payments. And I think this is where eventually we could reach its true potential, is the payment side, which is, for me, hasn't been cracked completely yet. And if you can make large transactions with little or no cost because of a crypto network, then that's really impressive. Of course, you have to trust that as well. We'll see what happens. But I think it's worth pointing out for all those getting a little excited now that there's a winter and therefore there might be another boom again in the future. There certainly might be. But what he said to me, and it makes perfect sense, is that you have your core crypto offerings like Bitcoin and Ethereum and so on. But the majority of the new stuff that comes out, particularly in the boom periods, if you see anything released during the boom period, is rubbish. And this is coming from a guy who believes in the sector. So he said the majority, not some of it, is rubbish. And that makes sense, right, Rob? You know, when there's a boom, people are suddenly launching stuff because there's a gold rush. It's what you would expect to happen in that type of mania market. So it's actually looking at what's the solid stuff being built now when everyone's not in a mania. And when the mania happens again, because it probably will, ignore the exciting, shiny stuff that everyone's getting excited about and saying it's going to the moon, because that's probably the one that's going to crash right back down the hardest or disappear altogether.
Yeah, absolutely. Every time there's the boom and everyone gets excited, you get some kind of speculative nonsense. So we very clearly had that in, 2021 with NFTs and a whole load of nonsense coins. The time before that, there was ICOs. What was it? Initial coin offerings, which again is just basically ways of people trying to make money out of the enthusiasm. But at the core, I think there's something really interesting going on. And for me, there is a night and day difference between Bitcoin specifically and crypto in general. And you're right, I've been keeping half an eye on the Bitcoin space, and it does all seem to be around payments, which is super interesting, because if part of the value proposition is, well, traditional currencies are not in a good way, so we need to build an alternative, then the whole store of value thing is nice, but you do need to have the ability to transact. And that seems to be something that's really coming along. And just coming back to the psychology piece, I find the world of Bitcoin fascinating because Bitcoin fans are true believers. So the people who are still in the space now, not just the ones who came along to try and make some easy money when the price was going up, the people who are still in it now are real, true believers. They've got a fanatical, almost religious belief in the power of Bitcoin. And it's just so interesting to see that. And I think part of it comes from, community and wanting to belong. And there almost is a religious aspect to it. But part of it is because they've come to this view, which is based on first principles. So it takes you back into the history of money and where it comes from, what it's for, and all this stuff. And they've come to this very well-reasoned position that, well, because of all this, Bitcoin has to be the answer. So they've got this unshakable faith because they've reasoned it all out from the beginning. I think there are two dangers coming from that. One is that perhaps they have such belief that they underestimate potential downsides, especially external factors. Like they tend to wave off regulation and go, oh, well, governments could never shut this down. Well, I think it probably could. And the other danger, of course, is that other people who haven't reasoned this out from first principles can see the excitement, see a price going up and get into it for speculative reasons, which we've seen multiple times before and we will, of course, at some point see again. But Rob, I'm curious, has that conversation you had changed your views or your behavior in any way around Bitcoin and crypto?
No, not at all. I mean, I own a very small amount compared to everything else, but that's more just for curiosity and interest to make me look at it occasionally. It's not for any belief. I think your point on fanatical religious side of crypto is interesting. Colin is not one of those people. He's very rational. But every time we talk about crypto, which is not very often, we often get like angry emails or reviews of people going, stay away from that topic. You don't know what you're talking about. And they're probably right on the part that we don't know what we're talking about. There are people who know a lot more. But that undying belief that what is being built can not be questioned, I think is not great for any asset class. You'll often hear us talk about the downsides of property. I could write you a long list. I could write you a list from this month. It happens. But I could also write you a long list, a very long list of the upsides and what a difference it's made to my life and many others. But crypto is not immune from that either. There are downsides to it. There is a load of rubbish out there. And there probably is some good stuff in there. But it's hard to know what the good stuff is yet because it's still, even though it's been around for its while, it's still in its infancy compared to stocks and property and gold. And that doesn't mean it can't become something important. But at the moment, I think the reason why the main markets and the main type of serious investors stick away is because of that uncertainty, because of that lack of track record, and because of the just crazy volatility. That volatility is what scares me off. I know it scares a lot of other serious investors off as well. I think it's a fascinating market because I'm interested in economics and I love watching the manias play out on such a regular basis. You don't normally get to see that. I mean, the last time we saw that in property was from around 04 to 08. We haven't seen a mania for a long time, but in crypto, it's every few years. So that's why I keep watching, at least from a behavioral point of view and an economics point of view. It's just fascinating.
It is. I love this stuff. And I love this kind of conversation. We have a lot of these chats, but we don't record them very often. So this has been a different kind of episode. And we'd love to know what you think about it. Do you enjoy these kind of conversations? Or do you prefer it when we stick to something a bit more structured and actionable? Or do you just want to shout at us about Bitcoin? Anything is fine. You can find us on all the socials at Property Hub UK.
Right, it's time for Hub Extra, that part of the show where we just have to deliver that little bit more value. And we're going to attempt to do that once more, as we've tried to do that pretty much every week since the pod started. And remember, if you want a bit more in your life, make sure you sign up to Property Pulse, our completely free email that you can take advantage of each and every week. It is written personally by Rob D himself. Why would you not want that? You've got to pay for his books. Get the free stuff off him. So sign up to Property Pulse at propertyhub.net/pulse. So you'll hear from Rob in the Friday newsletter, but let's hear from him now because you've got a lovely tool for us, Rob. Well, I think it is because it's AI related, and anything AI related is sexy right now.
Yeah, another AI tool. They're absolutely everywhere at the moment. And I'm trying to sort through them to find the ones that are actually useful is a full-time job in itself. But I found this one called AudioPen, audiopen.ai. And there are other tools like this. So this isn't like, oh my God, you must go and check this specific one out. But it's more to let you know that this kind of thing is out there and is possible. And I think you'll really like this, Rob, because I know that you prefer talking to typing, as many people do. And increasingly I do as well, which is weird. But you'd rather verbally convey your thoughts to someone than write it down. And AudioPen is a way that basically translates between one or the other. So what happens is you basically record a voice note. And this voice note can be as rambling as you want it to be. You don't have to structure your points well. You don't have to make sense all the time. You just kind of stream of consciousness say it. And then what AudioPen does is rewrites that into something that actually makes sense. And you can change the output format. So you can get it to change it into a set of bullet points. You can get it to change it into something that would work as an email. You can do all kinds of stuff with it. And I increasingly use this to save time. So for example, we're often asked to give media quotes about certain subjects. So rather than sitting and typing it out, I'll just record a 1-minute voice note, almost like figuring out what I think as I'm saying it. And AudioPen will turn it into a piece of text that I could either give a light edit to or just send off as is. So I think this is an incredible example of the true power of AI. So we've been talking about crypto. With AI as well, there's so much hype. How much of it will actually turn into something useful? And this is an example of something that's actually useful today. It's useful to me as someone who actually likes writing. But if you're someone who doesn't like writing or even struggles with writing, then this is super powerful stuff.
Well, Rob, as someone who's a professional rambler, this sounds like an absolutely ideal app to me. I will check it out and take the hint that was obviously needed. Thank you. It sounds awesome. It's so clever, the stuff that's coming out now. It's just amazing. A little bit of the hype has died down on AI. Everyone got super excited because it's new, and then people have chilled out a little bit on it. But my advice to everyone listening is pay a lot of attention to here. The hype may have died down a bit, but this happens with most new technologies. You get, wow, it's here, everyone gets excited, and it's like, oh wait, it's not going to solve all our problems on day one. I'm not as excited. But then some interesting stuff is built. Like going back to crypto again, I think there's so many interesting things happening in the AI space. It might not be getting the hype it was a few months ago, but I think it's in your interest, if you want to succeed in life, to be a first mover on this type of stuff and make sure you stay on top of it, because it can really give you an advantage. So highly, highly encourage that.
Yep, and we will continue to surface these tools on the podcast because they can be so useful in your property endeavours and beyond. But that is it for this week. Thank you for joining us and listening in on this conversation. Do let us know what you think about it at Property Hub UK. And we will see you again for Ask Rob and Rob on Tuesday. Until then, have a great week. Bye-bye.
Bye-bye.